Chapter 1 Revision. No new work can be added in accounting before you are certain that you understand all the previous work that has been done. Ensure that you fully understand all the work covered in grade 10. Refer to your workbooks from grade 8, 9 and 10 when and where necessary. Ask your teacher to explain any aspects that you are still uncertain of. The following revision exercises are aimed at analyzing all transactions from previous years according to the accounting equation. It should give you a clear image of whether you fully understand the previous work and which aspects need more attention. Exercise 1.1. Required. 1.1.1. Analyze the following transactions using the headings given on the answer sheet. Adjustments must be done on 28 February 2025, the end of the financial year of the business. All calculations must be rounded off to the nearest rand. Transactions. On the first, the bank statement shows the following deductions: service fees 240 rand, electronic bank charges 95 rand, and electronic transfer fees 110 rand. On the second, goods were sold on credit to a debtor 10,125 rand. A profit margin of 35% on the cost price is maintained throughout. Number 3. An electronic transfer of 9,025 rand was received from a debtor regarding settlement of an account after 5% discount was allowed. Number 4. Stationery was bought on credit for 12,000 rand. Number 5. An electronic fund transfer for 3,500 rand was made to a creditor as settlement of an account of 3,800 rand. Number 6. The discount allowed on the electronic payment previously received from a debtor, see number 3, must be cancelled since the payment was made late. Number 7. 50,000 rand was invested at ABSA in a fixed deposit at an interest rate of 4.5%. Number 8. A previous fixed deposit at FNB has matured. The original deposit was 25,000 rand. An electronic transfer directly into the current bank account of the entity was received from FNB for the deposit and the interest for the last 3 months at a rate of 4%. Number 9. The bank statement reflects a credit entry in respect of interest on our current account, 760 rand. Number 10. A loan of 80,000 rand was obtained from Nedbank at an interest rate of 9%. Number 11. Make an electronic transfer for goods purchased, 16,000 rand. Number 12. Pay via EFT for the delivery of the goods at the business, 900 rand. Number 13. Pay the first installment on the loan from Nedbank, 5,300 rand. The amount includes the interest on the loan for the first 3 months. Number 14. The bank statement reflects a debit of 1,300 rand with a reference being interest. Number 15. A credit note was issued to a debtor for goods returned, 1,620 rand. Number 16. A debit note was issued to a creditor for goods returned, 2,100 rand. 17. The account of a debtor who owes an amount of 450 rand must be written off. 18. The owner took inventory to the value of 3,510 rand for personal use. 19. The account of a debtor owing 3,000 rand must be charged with interest of 12% for 6 months. 20. Stationery to the value of 800 rand, which was returned to a creditor, was accidentally posted to the account for fuel in the general ledger. Correct the error. 21. Receive an amount of 1,100 rand from a debtor whose account was previously written off as irrecoverable. 22. Depreciation on equipment must be written off at 20% per year according to the fixed installment method. The cost price of equipment is 560,000 rand and the balance of the accumulated depreciation account on the 1st of March 2024 was 490,000 rand. 23. Depreciation on vehicles is written off at 10% per year on the diminishing balance method. The business owns only one delivery truck. The truck was bought on 1 June 2023 at a cost price of R480,000. 24. Rental expenses for January 2025 and February 2025 are still outstanding. The rental expense amounted to R18,500 per month and increases by 8% on the 1st of January every year. 25. Interest on the fixed deposit at African Bank shows that a total amount of R12,000 was received as interest during the year. An amount of R250,000 was invested on 31 March 2022 at an interest rate of 6% per annum. On the 1st of November 2024, the interest rate decreased by 1.5%. An amount of R50,000 was withdrawn from the fixed deposit on the 1st of January 2025. Number 26. The insurance premium has already been paid up to the end of June 2025. The total amount paid amounts to R65,600. 27. Rental income shows a total of R131,195. The rent for March 2025 has already been received. The rental was increased with 9% on 1 July 2024. Number 28. An EFT for R45,900 was made to the South African Revenue Services, SARS, for monthly tax deductions from salary and wages. Number 29. It was discovered that inventory to the value of R3,375 had been stolen out of the shop. Number 30. The inventory account reflects a balance of R65,000. A physical inventory count was performed and reflects the value of inventory on hand as R59,000. 31. A total of R86,000 was spent on stationery during the year. Stationery to the value of R82,600 was used during the year. 32. The provision for bad debts must be reduced by R680. 33. Debtors allowance of R22,000 must be closed off and transferred to the sales account. 34. The net sales for the year amount to R877,500. Transfer the gross profit from the trade account to the profit and loss account. Number 35. The net profit percentage on turnover for the year is 14%. Transfer the net profit from the profit and loss account to the capital account. Let's have a look at the answer sheet. Before we even read through the adjustments again, you're going to go to your answer sheet. Then on your answer sheet where you have equity, liabilities and assets, the first thing you do is, in a color pen, quickly go write down the sign so that you know when it is increasing and when it is decreasing. Remember, owner's equity is all your incomes or all your expenses. Obviously, if it is an income owner's equity, it will go on the credit side because an income will have a positive effect on owner's equity. And if it is an expense, it will go on the debit side because expenses decreases your owner's equity. Liabilities, you'll sign as minus plus. An example of a liability is, for example, creditors control. Creditors control is if you are a company and you take out more loans on credit, then it goes to your creditors control ledger account. So it means if you increase your creditors control, it will go on the credit side, so meaning you are taking out more accounts on credit, but you also have to start paying your accounts off, then it will go on the debit side because your credit is then being reduced, your credit balance. Then you have assets. You get current assets and non-current assets. If you purchase more assets, it goes on the debit side because your asset value will increase. And if you sell assets, it will go on the credit side because your asset value then goes down. So that is the first step that you do. Is you go to your answer sheet and you quickly write down the signs, minus plus for owner's equity, minus plus for liabilities, and plus minus for assets. And then as we go through every single transaction, you are going to have to determine, is this account known as equity account? Is it a liability account? Is it an asset account? Each transaction will have two ledger accounts involved. Let's read transaction 1 again. The bank statement shows the following deductions: service fees, 240 Rand, electronic bank charges, 95 Rand, and electronic transfer fees of 110 Rand. Firstly, you must remember from last year that all of these fees are known as bank charges. So you will add up all of these three amounts, 240 plus 95 Rand plus 110 Rand, gives you a total of 445 Rand. And we now know that this is classified as bank charges. Step 1 is we have to determine the two ledger accounts involved. The first account is bank charges. The second ledger account will be bank. Step 2, we have to classify each account. Bank charges is an owner's equity, and bank is an asset. Then we have to ask ourselves, what happens to our owner's equity if we pay for expenses? Now obviously owner's equity bank charges is an expense, and we know that it will have a negative effect on our owner's equity. What will happen to our bank account when we pay for expenses? Well, our cash flow will reduce, so it will also have a negative effect on our bank account. Now we take our rough calculations and we simply enter that onto our answer sheet. So we know when we make a payment, our journal involved will be our cash payments journal. The source document came directly from our bank statement. The account debited was bank charges. The account credited was our bank account. We said that bank charges will have a negative effect on our owner's equity. That will be debited. See where you put the minus sign. And it also has a negative effect on our bank account, which is an asset, because we are taking money out of our bank to pay for the expense, so our bank cash flow is going down. See where the minus side is on the credit side.